In the email, we talk about there's a downswing hitting the support level on Friday, came with a demand tail and spike of the volume. This bar and this bar, I'll take this as bar one and bar two. Last Friday, bar two is similar to the Friday bar on 7 November. Both show up as hammer and similar volume. Suggests that demand came in on Friday, but the difference is there was a rebound after bar one shown up. The rebound was strong, a gap up, followed by a bullish bar, and then continuation to the upside until it hit the axis line. This round, the hammer shown up, it attempted a rally. There's a rejection tail. There was a attempt to rally until 6,800. After that, the close right at the low. The difference is obvious. The attempt to rebound fail on Monday. This is the failure bar. What does a failure bar mean? A failure bar means that this situation is not going to happen. Instead of having a continuation of the uptrend, we have a failure bar on Monday. It's likely going to be a breakdown bar shown up here. A break below this previous swing low could trigger acceleration to the downside, at least to test the low around 65.50. Another swing low support, and to see whether we get an attempt to bounce. It's important to monitor any attempt to rebound. For example, after a hammer shown up right here on Friday, we see an attempt to rebound on Monday yesterday, but immediately we get a rejection, close at a low, and it's come with consistent volume. Look at this volume. High volume, the close is near the low. The demand shown up on Friday means the zone right here, considered as a demand zone, that's where the buyer is going to show up, already gets absorbed by the supply. Supply overwhelm the demand at this zone. We could see an attempt to push down to test the low, and a more meaningful support level, support zone, as mentioned in my email sent out yesterday, is 64 to about 65. That is the previous accumulation zone where we have a breakout to kickstart the uptrend. If it break down, break below, it's easily going to come back to test the previous accumulation zone, 6,400 to about 6,500, before we see a meaningful rebound from here. It's going to get more choppy from here on. Previously, in my email, I also mentioned that we are going to see more weakness ahead. Even if we get a bounce like this, we're still going to see a lower low target. Why is that? Mainly because first, we have increasing of the volatility here. Look at this volatility. Section 1, Section 2. Section 1 takes 7-8 bars to generate this one downswing, but Section 2, it only takes 3-4 bars to generate this one downswing. It's a lot sharper, a lot faster. Look at the volume. The supply is increasing right here. We got an increasing of the supply and also increasing of the volatility. This doesn't look like a bottom to me. Even if we do get a rebound from this Friday's hammer, similar to this bar right here, we're still going to see a failure and then go back, break below, break down, and to test lower targets. First target will be somewhere around 65.50. Second target around 6,400. Okay, that will be a more meaningful target. It could easily achieve given the increasing of the volatility and also increasing of the supply level. You certainly need more time to settle down. S&P 500 already experienced rejection from a axis line, 6,900. We do get decrease of the volume right there. You can tell demand wasn't that strong. There's an exhaustion of the demand, and also reflected in the move. The thrust to the upside is getting shorter and shorter. Look at this thrust. The first thrust is this much. This is the first thrust to the upside. Second thrust become a lot shorter. Third thrust, this is a doji bar. It's barely moved the market up 0.06%, previous bar up 0.22%, the first bar up 1.53%. This is a classical exhaustion of the demand and also shortening of the trust to the upside. Another great sign, and it happened right at the 6,900 level, which was the axis line. It will be a lot clearer if we switch it to the hourly time frame. There is a axis line at about 6,900, where we have the previous support turned into resistance level. Support, once it broken down, became resistance. Resistance, another resistance. 6,900 was proven as a axis line, now act as a resistance level. Here is also another level, 6860, another resistance level. Here could be another one. 6,700, somewhere around there, could become a resistance. We need to see some form of the rejection of this 6,700 level for the bear move to kickstart. At the moment, the immediate direction is going down because yesterday's shown up as a failure bar. Instead of having an attempt to rebound, there was a rejection tail followed by a close right at the low. That is a failure bar that violate the attempt to rebound scenario. So once we have a break below of the swing low right here, which is the current bar testing, it's likely going to see another quick swing down to the low or even spring the low and have another attempt to bounce up before it's reached 6,400 level to attract more serious buyers and to generate larger trading range.